I think that not that many people are aware of what the Central Bank of Spain did in 2000, I think it was, when they instituted something called dynamic provisioning. And when dynamic provisioning was instituted, it was actually very smart. Smart in the sense that during economic upturns, a bank that's making loans is required, for every single loan that it makes, it's required to set aside a provision for loan losses. And that does two things. Number one, it keeps them from overextending themselves in this good time in terms of making more loans than they should, because they have to keep some back as a provision. And I think the second thing it does is it builds a cushion when there's a downturn, that they're not going to have to necessarily go out and seek new capital. They've got the cushion that they've built in the reserves, so that in a downturn they can then go to the provision that they had in the upturn and use that to smooth their way through. I think as of 2006, the Spanish banks had something like 200% coverage of their non-performing loans, where the average for the European Union was 58.6%. So my answer would be yes, I think that it was a smart way to foresee what might happen in a downturn, and by building that cushion in the upturn, they've been able to, I think, make it through this in not nearly as scarred as the rest of the financial institutions worldwide. Although there's one last thing to say about that, and being that I teach financial reporting, it is entirely not in compliance with international financial reporting standards. And in fact, in 2004, the central bank modified the dynamic provisioning, because that was the year in which the European Union countries had to adopt international financial reporting standards. Having said that, though, there is a movement worldwide that says we'll have banks comply with international financial reporting standards, but from a capital standpoint, we ought to allow them to do things like the Spanish dynamic provisioning, which is not in compliance with international financial reporting standards, but which makes sense from an economic standpoint. You know, I'm somewhat of an apolitical person. I vote both Democratic and Republican. So I think that sort of painting a broad brush of, because this kind of reform came in, which led to significant deregulation in many cases, isn't necessarily a fair characterization of why this has happened. I've been teaching for over 30 years, and I have gone through at least a half a dozen serious problems in the financial markets worldwide, but mostly in the United States. In the United States in the 1980s, we had the savings and loan debacle. We had in the 1970s, in the early 1970s, there was a stock market crash because of overexuberance about price-earnings ratios, and we had something called the Nifty 50, and the price-earnings ratios there were just totally out of line with value. So we've had these crises before. Just prior to that, in the early 2000s, we had the dot-com bubble burst. I think that greed is something that exists worldwide, and that smart people who are greedy will figure ways to circumvent regulatory systems. Perhaps the reforms in the early 1990s helped them to do that, but I still think that when we recover from this, which we will, there will be smart, greedy people out there who will be figuring out a new way to perpetrate a fraud on the rest of the world. And the only thing that we can hope is that we catch them and we put them in prison, and that other smart, greedy people who are thinking about doing that would decide that the color orange is not their favorite color for the orange jumpsuit that they will have to have.